Welcome to Talking Real Estate with Mark Wehner at Champions Real Estate Team here at Berkshire Hathaway Home Services Ambassador Real Estate Company. Joining me live is Russ Williams with Williams Mortgage. So every Wednesday we try to jump on here and give you an update of what's going on the real estate market. So we'll kind of jump straight into it. Don't want to keep you too long, but let's give you kind of what's going on over this last week and blow it up here for you a little bit. So we got 519 new listings that went live this last week. We had 367 new contracts, and we had 511 sold homes. So we're seeing a lot of new inventory come on the market. As we can see, contracts were down from the previous week. I think we were about 390 last week. So I still think, with interest rates kind of peaking out at that 3 or 6% kind of range, I think some people kind of maybe moved to the sidelines, and our number of inventory has gone up, which is very typical for this time of year. So we usually see after Memorial Day and between the Memorial Day and the 4th of July holiday, see a lot of inventory come on the market. People want to get in before school or get their houses. Everyone's settled before school gets rocking and rolling. And then we kind of see a little bit of a lull, and then it picks up before the holidays. So still a great time to buy and sell real estate in that regards. Let me get you switched over to the 30,000 foot view graphic that we have here. Full screen. Zoom in a little bit so it's a little bit bigger for everybody. So 30,000 foot view, we look at the number of listings in the Omaha and Lincoln MLS. We have just 1,828 active listings, and we have 974 in Douglas and Sarpy County. So I kind of broke it down a little smaller to the Omaha metro kind of area. And then the existing homes we have are just under 500. So we're kind of creeping up there. I remember it was a couple of weeks ago, we were just breaking the 300 mark. So we do have a lot more inventory out there. New construction just under 480. Months of inventory ticked up a little bit, 1.2 months of inventory. Our sold price went up about $1,000 from last week, about 311. So that's new construction and existing homes combined there. So yeah, as we see, the market is still very strong, I feel. Let me get out of it. So as we see, the market still very strong. We're still seeing, we were just had a sales meeting yesterday at Berkshire Hathaway. One of the agents there brought up a very good point that, we've been beating the drum, which is very true, that we have low inventory. Well, when we look at the numbers, we've actually had more listings than we've had in a very long time over the last year. It's just the fact that we keep hovering around that, that 1,000 to 2,000 homes on the market at one time. We are still getting a lot of homes on the market. They're just going one in, one out. As one comes on the market, boom. So it appears to everybody that we don't have a lot on the market. But if you are actively looking for a house, you literally have to be actively looking for a house day in and day out, and working with an agent that is keeping their thumb on the pulse of what's going on in the real estate market, and finding you houses that may be coming on the market. You get a contract written before they go on the market, so we're seeing a lot of that. And then what we've seen, as we just looked in our numbers there, our number of pending sales has dropped, from the previous week, which you'd think, I know the College World Series came into town, so maybe that had a little bit of effect of people, and obviously it was 900 degrees outside. That sometimes has a little bit of effect of people looking at going out and looking at houses. But I think interest rates obviously played a big part. I think with our economics, our gas at $5, roughly almost $5, groceries, all that stuff. People are kind of, stepping back and looking and going, okay, where do we sit for buying a house? The other thing that we're looking at too is that since interest rates have gone up so quick, in the last month or so, is that you may have been pre-approved a month ago at 5.25. Now interest rates are at 6%. As a listing agent, if when I'm selling a house and I get a pre-approval letter, and they write in the contract in paragraph 8 what their max, basically where their cap is on interest rate, I want to make sure that pre-approval is updated, with someone like Russ Williams at Williams Mortgage, and making sure that they are actually approved for a 6% interest rate, on a $300,000 house or whatever that house is, and make sure that they have that. Sorry, I got my daddy daycare here with my daughter. So what's the matter, honey? And so you want to make sure that buyer is ready to rock and roll. And even if interest rates go up a little bit, that they are still qualified, for that purchase. If they go to 6.25, who knows? We don't necessarily have that crystal ball on what's going on in regards to that. So that's one of those things that we're taking a look at. The market is still very hot, but we'll jump in here with Russ and kind of touch base. I know we kind of just alluded to what's going on in the interest rate business. but yeah, we can kind of see what's going on there. So
yeah, Mark, interest rates are at the highest levels we've seen in the last 13, 14 years. And they probably will hover in this range. We've been seeing a lot of volatility since last week. Of course, the Federal Reserve Bank increased the short-term rate. At the same time, the Fed is trying to reduce their balance sheet. So all that to say that we expect a lot of volatility. You got your helper there. So we expect it's going to continue to be volatile. The important point to make, though, and you've already kind of made it here, Mark, is it's still a great time to buy a home. And based upon the demand that's still out there and the fact that inventory is just 1.2 months, Mark, to have a balanced market, we should have 3 months at least worth of inventory, if not more. So this is still a very strong seller's market. And Pulsenomics, for example, just in the last 2 weeks has come out with a report from 100 leading academics, economists, et cetera, across the country, and they're all projecting just under 5% appreciation nationwide per year for the next 5 years. So this isn't going away anytime soon as far as home prices being very strong. And to the point that you mentioned earlier, Mark, we are seeing that the ability for the lenders to pay closing costs is dipping. And the primary reason for that is because lenders are already expecting that these loans are likely going to pay off early if interest rates drop over the next year to 2 years. So they're not giving as much credit up front. And that's just all a factor of where the economy is at, expecting possibly a slowdown, maybe even a recession. And if we do, if you look historically, and I can send you charts if you want to see them, we do see housing values remain stable or increase even during recessionary periods. And towards the mid to the end part of the recessionary period, we see mortgage rates drop as well. So this is a great time to buy a house at today's price as opposed to next year's inflated price. And I've seen a few people post, marry the house, date the rate. We don't think you're going to be in the loan long term. Let's just get you into the house at today's price as opposed to paying a lot more next year.
Yeah, and I know, like you said, those loans getting paid off earlier. So that basically what that tells me is that a lot of people are going to be refinancing potentially. And I think, as you said, I don't think necessarily we're going to, who knows? We don't have a crystal ball, but I think prices just based on demand, the home prices are going to stay pretty steady. We may not see the 15, 20% jumps, year over year. We'll probably go back to where we were historically, that 3 to 4% appreciations. We're still seeing a lot of investors out there still buying houses just because they know that those prices, it's still a great asset, and having that asset through a recessionary period that's going to hopefully cash flow for you is going to help curb some of that, inflation and stuff of that sort. So like we said, I think it's still a great time. I think every person's situation is unique. And I think that's why we want to sit down. If you have questions, to sit down and go over how we can help. What's the situation? It's kind of funny. I just took my daughter to the doctor, this morning, and I was talking to the doctor, and she was asking me what's going on with the market. And, I was just educating her on what was going on. And sure enough, I'm going to go meet with her probably on Friday and just give her an idea of what does it make sense, to sell the house now, to wait, to update, to do this, to do that, and then buying a house on the other side of it. What is the best avenue for you? And it's just giving you that information so you can make the best decision. That's what we like to do. I enjoy doing that. It's like coaching. And that's kind of what drives me is the coaching aspect of it. And then you can help people, buy a house, sell a house, and all that kind of fun stuff. So what are you doing? You see the buttons? That was pretty. Can you say hi? Can you say hi? She's not feeling too good. So, but anyways, that's kind of all I got here today. But if Russ has anything else, nothing. So cool. I appreciate everyone jumping on, and we'll see you guys next week. And as always, if we can help you, you can jump on our website, championsrealestateteam.com, view all the active homes. There's obviously more homes on the market now, so you got more to look at. So, but if you have any questions, give us a holler. If you have any mortgage questions, give Russ a holler, 290-8936. I'm happy to answer any of your questions as myself as well, 402-672-7670. And we will talk to you soon.